The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Daryl Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Daryl. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Daryl Martin.
Hi, folks. Basil Chapman sitting in for the vacationing Daryl Martin. My pleasure to be here. I had a couple of questions if I would cover certain things during Daryl's show when I mentioned in the hour before. That's the 11 o'clock to 12 o'clock hour when I usually do my Tiger Technicians Hour, Monday through Friday, 11 o'clock till noon Eastern Time. And then Larry Pesavento came on. Great show with Larry today. And then I'm stepping in for Daryl. Dow's down up 16. S&P's up $1.65. This is a fascinating market. Comp index is up 11 at 43.64. This Wednesday, the 6th of August. What we're looking at is gold at a huge move. It's up 20, not huge in terms of percentages, but it's a big move for gold, up 23 right now at what have we got? We've got 1308. Silver is up 20 cents at 20.04. High grade copper is back to the 3.1 area. Crude oil is at 97.17, down 21 cents. Bonds are up 830 seconds at 138 and 1830 seconds. The dollar, now it's going to be really interesting, because let me just move this chart away. The chart that you're looking at, if you're looking at Tiger TV, I had a question about the IWM. Would I look at the 120-minute chart? I did that in my hour, but I didn't look at the 30-minute chart, which I believe is making an E/B. I'll talk about that in a moment based on the Chapman wave methodology. Most importantly, let me just have a look at the dollar, because this is going to be I don't know if I should use this time for the dollar, because it's more to do with the Chapman wave methodology. How can I do this? I will talk about it. I'll talk about it a little differently. The dollar right now is in leg G/C. I don't want to make this very complicated. I'm to say in the Chapman wave methodology, all you need to do is you need to count each successively higher peak with a capital, with uppercase letters, going to a D, and then it could go E, F, and even a G. Cannot go more than a G. You can't get an H. There's no such thing as an H. Just like in music, you can only get A, B, C, D, E, F, G. Then you have to start again with an A. So in the Chapman wave methodology, you got C, peak A, peak B, peak C, peak D. You can go to a peak E, F, and even a G, but then you have to look back. If there's a new high, have you recycled? Is this now a brand new leg D? Have you got a second buy mode in place, etc.? So I don't want to make this complicated for those of you. And it just suffice to say, my CD introducing the Chapman wave methodology. It's a CD book available at TFNN. It's the only place you can get it, really. It's something like 27 chapters, different techniques, as well as study pieces and also questions and answers, and the methodology, as well as this is really interesting, as well as a glossary of about 458, of about 16, 17 pages. So these are the patterns that we look at. So let me just get back to what I wanted to talk about here, is that the dollar has made a peak F in the daily chart of the Dow. Now, one of the reasons why I call this a peak F, and there's no alternative wave whatsoever, and why that was a D without the down arrow, is because the price fell, but it didn't. The MACD, the moving average divergence, didn't break negatively. It has now, but it hadn't before. And the stochastic was rallying, although it was a right shoulder failure pattern. In other words, this high was way lower than it was when we had the high back at 7:15 this morning, and that was at 81.72 on the index itself. Now, in the Chapman wave methodology, I'm going to talk about this kind of in a generic way, but for those of you who have studied the Chapman wave methodology, you'll know exactly what I'm talking about. The last peak in the Dow daily in the dollar daily was at 81.02, and that occurred at that was in June the 5th, because the next day was a lower high bar. Now, what's really important about this, if you follow the MACD, the moving average convergence divergence, you'll see from this beautiful upside break with a wide differential between the faster moving average and the slow moving average, you got a peak A. That was a double top. I forgot to change that. 79.92. 1792, I call that a phantom peak, and a phantom peak doesn't have to be there if you in fact go beyond a D. So let me just take that away, exit out. That becomes a perfect F, that becomes a perfect E, that becomes a perfect D, that becomes the C right there. All you do is move along, nothing to see here, folks. Except there is something to see, and it's very important. And that is that there was a perfect peak A from the low of the 11th or 12th of the 8th of May at 78.91, a perfect peak A, B, C. There's the 200 period moving average resistance, pulls back and it struggles, it pops up and goes to a D, pulls back because it couldn't hold it, holds the 9 period moving average, that black line, then it goes to an E, and then it pulls back, and then it goes to a spike to an F, and that's what I call a rogue wave. Why? Because that leg F was not accompanied by MACD and stochastic participating with recovery highs, and in fact it did pull back. It had a little bounce, and it had a doji candle, made the H pattern in the Chapman wave. That's that right shoulder failure right there. And then what does it do? Plop, it goes down, goes to 79.74 and starts a brand new peak A, B, C. And now this is something called the instant restart. When you get to the fourth highest peak D, if there are certain characteristics that are met, it could in fact become an instant restart, saying the next peak, it's very, very positive to do that. The next peak is E/A, then F/B, and then G/C. In this particular methodology, very, very often when the fast-moving average, and this is what I teach in my Master Trader series, this is usually level 2, but I'll discuss it here because there's so many people now that are using the Chapman wave. When you see a negative crossover, as you are here, when the little thin red line is moving above the black line, the 9 period moving average, that's a warning to say, yes, that fast moving average of the MACD might be good, but the stochastic's pulling back, the relative strength, that little red line will change to gray if it goes under 80%, is turning down, and all of a sudden what you're looking at is in the dollar, you've got a chance that TXU14 for the actual contract itself might be in leg F in the futures contract with the same characteristics, and that makes the 120-minute chart, if we go back to the continuous contract, makes it really important, because what it's saying is, it's saying that I just hit the wrong key, DXY. What it's saying is, right here, this could in fact turn out to be that phenomenon that I call a G top rather than a recycled C going to a D. What will we be looking for in the next 2 days? There is no new recovery high above 81.72. Instead, it starts to go under 81.25, and then all of a sudden, the stochastic goes way below 80%, and the MACD starts to dip. And when it has this M-shaped pattern like over there, the next rally doesn't even get close to the highs. It could, in fact, get to a D, but I'm saying this is where I'm becoming really cautious on the dollar. That says that the gold contract, isn't that interesting? The gold contract, which very often mirrors what's happening in the dollar, not always, but very often, is making some kind of a low. That could be a tradable low, but what is it really telling us? It's telling us be careful of the Ukraine situation, because this could be a sudden overnight series of bad news events that all of a sudden kicks in, and finally you're getting the fear factor as gold rallies, and that might put some pressure on the dollar. So I wanted to go through that, and then the question that I had was that the key support in the in gold right now, that the one is at the 12.99 level for the August contract, and the resistance is at 13.13. And that's going to be really important to monitor. Now let's go to the IWM, which is the Russell 2000 ETF, iShares. Question is, where are we in the waveform? Well, I have us at a peak E/B. And one of the reasons is that last high right there at 11:30 this morning at 112.23 on the 30-minute chart pulled back sharply. The stochastic all lined up, so you are seeing exactly what you need to see there. But what happened was the dash trend line, that pink trend line, which is now in force, is actually pointing towards a high at 4 o'clock on the 6th. That's today. I don't see how it can happen between now and 4 o'clock. But that would be the target price, either that or this evening, but somewhere into the high bar of 112.99 at 10 o'clock in the morning, Eastern Time, on the 11th of July. Now, why would I call this E/B? Because the MACD has made an M pattern, and so far that fast-moving average is holding. And you see the little green vertical lines? That says that the histogram is still very positive above the 0% line. Here's another thing. See the stochastic here is at 86%. Anything above 80% is good. Anything above 85% is really good. Then anything in the 90s is fabulous. So what we're looking at is good technicals. The 9-period moving average, that little purple line there in this 30-minute chart, is holding so far. And you've got this left side, right side price time match, which says that the level I gave you would be a target. And if it continues rallying, you could go into the close of the session tomorrow, the 7th, with a test. Well, I don't like to get too carried away. Let's just say there could be higher prices. Now, I added this particular line since Darryl does everything statistically, and he does it based on mathematical formulas and software programming and observations that he's had over the many, many years that he's worked at the Diagnostic Trading Hour. And in terms of the diagnosis itself, using the Nadex platform, I thought I'd include a couple of things. This is a 200% 200-period exponential moving average, and it also has bands attached to it, which would be, call them just a little outer perimeters. Within, it's almost like a Bollinger Band, deviation levels. But most importantly, what I would look at is that this is the area of containment. That should say any rally should be held in the IWM into the 113.16 area, and any support should come in using the other techniques in the 112 to 111.90s. I'll be right back. This is the Diagnostic Trading Hour. I'm sitting in for Daryl Martin, Basil Chapman. Yeah, Dow's up 31, S&P's 3.5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Daryl takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back. Basil Chapman sitting in for Daryl Martin. And I'm going to do a couple of things here. Then we're going to go to the automated part of this. So just quickly on the IWM, this is leg A up, a little bounce, stop right at the 9-period exponential moving average. Just stuck between the 9-period moving average and the slow move and the 200-period moving average, which is at 112.02, and it's trading at 112.10. And right above it is 112.44 9-period moving average resistance. The MACD and stochastic, it's a positive divergence between the Russell 2000 ETF, the IWM trading at 112.10, up 72, and the 120-minute chart has had a very concerted effort to make a peak A, B, C, and now a leg D. What's fascinating about this is one of the shortest little peak Ds. Let me open this up. We've had in a long time. Look how this one went from 112.22, the doji high of 115.65. Look how this one basically went AB like a CD from 116.05 all the way to 120.97, the all-time high. So this is kind of pathetic with all the technicals acting so well, but at the same time, it is a positive. It is a buy signal. It's still in the buy mode. mode. So the 120-minute chart is saying, I'm trying to hand over like a baton. I'm trying to hand over to the daily the strength that I have in my 120-minute chart, but there are too many resistance levels that are being hit. It needs to get to 112.90 or higher to really show that it's got sustaining power. So that's that. That's IWM. Then the next question I had was, let me just go one at a time. CSTY, that's Solar City, trading at 72.97, up $1.72. Nice action, up 2.41%, making the cup. And they're not one of my favorite patterns, only because it's, when you recognize what it's done, it's already a little too late. But it is a terrific pattern, the cup and handle. And it says that a close above 74.97 would immediately target the high of 76.06. And then we'll have to see what happens. And that, if it goes to 76.07, it becomes leg C in the daily chart. And so that's what I wanted to cover. So very positive. And any close below 71, no, any close below 70.6, no, wrong place. The close in the next 3 to 5 sessions below 67.80 will be very negative, because you'd immediately go down to the 62's major support. So that's that. Next thing I want you to do is to go to a couple of questions here about, so we've got Celgene, one of the great high flyers, which is having a tough time right now. It's up just 3 cents at 86.60. It's just making this H that goes to an M pattern. All I can say is, if Celgene at 86.60 at any point in the next week and a half breaks 86, not 86, if it breaks 80 for support, it's probably going to retest the 82.90, and that's going to be really critical, that level of the lower 17th of July. And it needs to decisively clear 89.76 to be able to go to its all-time high of 90.50. Weekly chart has got a peak C, and that says at some point it should go for a leg D. We'll see how it maintains those levels that I just discussed. But the monthly chart is saying, hey, all very well with that weekly chart. I'm the one that really counts. And so far, I'm making a doji candle from last month, which was last week, and I'm making a doji candle this week. This is going to be really interesting, because it's had a couple of splits already, and so it's really up at the 160, 170 level as of now, but it has split. So these are the levels to watch. Watch 80 on the monthly chart. If in August closes under 80, that's very negative. Closes over 91, 92. And it will say, hey, this is really good strength. Don't misjudge me. But right now, I think it's going to be weakening. Gilead Sciences, leg C in the weekly. I have no choice but to count it as C. That's very strong. Gilead Sciences monthly is leg E, peak E if it doesn't make a new high. But it has gone to an EFG, a G/C in the daily. And holding quite well. So there are just a few biotech stocks that really could help the IBB or the BBY. Amgen, same thing. Amgen made a peak G top at 131.24. It's digesting its gains, peak D in the weekly probably, and probably a leg E in the monthly. I'm watching this real closely. So that's that. And could I look at copper? So I'm going to just jump over to the continuous contract first. This is what my fear was, that copper couldn't hold the gains, and that leg B in the daily chart was very unusual. Yeah, there's no other way I can count it. Is that correct? No, there is. It could be an F. So F/B. Let me just do that, because I always like to be as clear as possible. Edit. F/B. Yeah, I don't like it. I think high-grade copper's got a real problem. It's at the 200-period moving average. A break under 3.1 to $3 support will be very negative in the next week. I'll be right back with Brenton Martinez. We'll look at UNG. Dow's up only 23.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Tom Martin. And we're going to go straight to Brent in Martinez, California. Hi, Brent. How are you?
I'm doing just great, Basil. How are you doing today?
Very well, thank you.
I was calling about the UNG, which we've spoken about in the past.
All right. So do you have a position right now?
Yes. What I generally do on my trades, Basil, is just try to be patient and really focus on just a few particular trades that I'm tracking, and this one came down to a target that I had projected weeks ago around 21.
Right.
It did multiple tests down around that level that I felt comfortable that I could put on a trade, and around 21 with the stop at 2050. And then that's where I'm at. I just would like your analysis, if you could, please.
Well, it's fascinating. I just noticed, I completely forgot. I had written it down on my notebook yesterday as a stock that should have been on my list to buy today. And for some reason, I didn't actually implement that. We went with something else. I guess I was a little carried away because I was looking at the way gold was rallying. And so as I see it right now, this is a very interesting chart formation. There's a very a full buy mode in force in the 120-minute chart for the UNG, which is the United States Natural Gas Fund, and is bumping into this whole area of resistance where there was a gap down. Well, there are always gaps in this, but this is a pretty serious gap. From the 21.75 low of 4 o'clock on the 18th, on the 21st, after the weekend, gaps down, 21.45 is the high. So you've got yourself about a 40-something cent gap. Well, we're into that right now, 21.67, leg E in the 120-minute chart. The MACD is holding very well. 93% is excellent. And for the stochastic, and the MACD is still expanding, and the histogram is still positive. So that says any pullback to the 21.46 to the 21.36 area should be held. It should be a containment area, number one. Number two is 21.29 is the 9-period moving average resistance or support in the daily chart, and right now it's above that in leg B. So I probably would have got this if I implemented a plan today. It's really not that much higher because this is one of those situations where as soon as a buy signal can go to a buy mode in the daily chart, let me just expand this so you can see that. Usually you get a pretty decent series of A to B to C, peak D, and even an E, sometimes even an F, with very nice price movement, even though it's choppy. And that's the one thing I was going to speak to you about, that this peak A to leg B is the smoothest that I've seen in quite a while. It resembles the one that started off back in 24th of March of this year at 23.71 and went to a leg B, then a peak B, pulled back, held the base, and then started another move in a stair-step fashion to see. This is different. This has made the beautiful curve. It's as if it wants to walk the 9-period moving average. So I'm just going to make it as simple as possible. The daily is in leg B, and the technicals are concurring. Doesn't mean it doesn't mean right now that it's going to go into a buy mode. No, it doesn't. Why? Because the 120-minute chart has to prove itself in a different way. It has to prove itself by suggesting that there's internal strength, that the low of 21.58, which is the candle of 11:30 this morning, that 9-period exponential moving average, while it could be taken out to the downside, it becomes a magnet that attracts the price every time it pulls back. Price keeps wanting to come back. So here's my recommendation. You're in the trade. I don't know if you want to add to it or you want to take off, anything like that. I'm just thinking about the trade itself. As far as I can see, this is really good action. But it's not until you get a leg C. That means you have to have a pullback to come to make a peak B. See where it holds. If it holds really well, instead of breaking under 21, it holds above 21. Preferably it holds above 21.20. And then it starts moving higher. That would be really good action. And I like your entry point. I think for risk reward, you've got an outstanding risk reward right now. I'm not sure what stop you would have used in the very beginning. What was your stop in the beginning?
I bought it just under 21 and $20.50 was my stop.
Okay. Just my own personal view at this particular point is that if it does go to 21.85, then I would raise my stop on half my position, and I would also then raise the core position stop so that it's closer to your entry level. No, it doesn't have to be there, but maybe 30 cents less, just to give it a little bit of room, but at least holding it so that it could turn into a core holding, while the other half becomes a trading vehicle. But right now, nice entry. I think it's getting a little bit overboard. 21.46 should be 21.52 to 21.46. It's probably the area of good support. Let's see how it holds. I think you've got yourself. the potential, I'm just saying the potential for an ETF, or this ETN in this case, to be able to go to at least a C and probably a D. I don't know if this is the move that can take it to the 200-period moving average at 23.11, but I definitely see a chance to at least test the high of the gap down price of the 17th of July at 22.38. That'll give you a nice comfort zone if it can get there. Hey, nice entry point.
All right. Thank you very much, Basil. I always appreciate your help.
Thank you. You know, I'm not even talking about the weekly because it's got a lot of work to go. So let's just do one thing at a time. Nice going, Brent. Thank you for calling. So, folks, let's just do a couple of other things here. Now I want to go to this. Yeah, so the two things I wanted to do. One is just a real quick thing. Someone mentioned in the den, Peaky in the den said we're making a Moroccan arch. I wasn't sure what that is, but I grabbed my naked chart, the 10-minute SPY, because he spoke about the SPY. Look, the most obvious low bar right there at 191.08, made at 20 to 10 this morning. And it goes peak A, B, C, D, E, and F. Let me just see if I've got another one here that has all the technicals so that I can put the two together and show you something really interesting. Because Darryl is all about substance in terms of being able to verify, to both show the technicals in terms of pinpointing moving averages or different bands of strength or weakness derivations that you can pick out. And I just want to see if I can do this right here. 10 minutes. We've got the SPY and the 10. What else are we using for a 10? We're not. So we'll take one of these 5-minute charts right here. Data request failed. Let's go to UNG. There it is. Okay, so this is a 5. Let's make it a 10. I'm going to show you something really interesting here. There it is. 10-minute chart. Look. The stochastic, the red and green lines there, moving higher. It pulls back with a positive divergence. The MACD pulls back right to that point, and it becomes a high-level bar at the bottom, and then it starts an up arrow goes there. It starts A, B, C. What am I doing here? This is not even the chart we were supposed to be looking at. D, doesn't matter. And now, very quick, E, and here comes an F, and it says, hey, right around here you should get a little bit of a digestive moment. So let's just leave that because it's really the SPY that I want you to look at. Here's the SPY. So, where are the technicals? What happened? Uh-oh. Hello, everybody. Where are the technicals? Let's go back a bit. Oh, this is a waste of time if I don't get it right away. Settings, data range, 10-minute bar, 5 days back. Let's just make it 7 days back for now. There it is. So here we are. Look, there's a rising stochastic but a falling price movement. That's called a positive divergence, especially when the MACD has already crossed positive, and that pullback was just an emotional pullback. And that was this morning. And it goes peak A, peak B, peak C. This is the 10-minute chart of the SPY. Should have told you that. I'm sorry. D, E, and F is where you got to be real careful. There's the F, and it pulls back from the high of the day of 192.89 to 192.18. This is a 10-minute bar. And so far it's saying that this sell signal right here is working, but it's high-level consolidation. MACD pulled back, price held. Stochastic plummeted, price held. That should be very positive because the next rally should try to rally. But there is now internal weakness so that any rally has to take the SPY above that bar there of 1240 of 192.81 and definitely close above 192.89. I think it's going to struggle to do that. So that's with all the technicals, and this is without. You can keep it simple or you can make it complex. Look at that. Isn't that pretty? And here it is with the technicals that I use. So I just wanted to show you that. Now let's do something else. I'm going to go here. Let's go to someone mentioned earlier that wood, which is iShares Global Timber and Forestry ETF, had been acting well. Yeah, but you remember I pinpointed a long time ago that it made a peak F at 54.32. pulls back to the up channel support, the inside track, Chapman wave inside track, rallies, makes an arch formation, that lowercase h, and there it is. It's going to test that low on the left of 48.50. It's at 49.57. A point in a little bit, and it takes it out, and it's going all the way down. Got to be real careful. And there's the Philadelphia Housing Sector Index. Lousy weekly chart. Look at that. Failing. Got to be careful here, folks. So here's the TYX. I want to spend just a moment to show you that the bond yields, the white is the 30-year. Look at the 10-year. It plummeted down to 23, round number this morning, 2.3%. It's now trading at, no, that's impossible. 23. It's now trading at 32. Oh, wrong one. 23. It's now trading at 24.73. That's still quite a big turnaround. And it's gone to a leg D. So this is going to be a very important moment for bonds. Now, the reason why I wanted to get not to this chart, in fact, this is wrong. Let me get out of here. Close the workshop. Close the workspace. Let's go to this one right here. And I'm going to show you something that is very important for me, at least right now. I want to show you the technicals as they concur with what we were seeing in my technicals, but these are the technicals based on something else. This is the IWM. This is a technique that I developed maybe 7, 8 years, could even be more, time flies, I don't know. I don't often use it. Oh, bad data. Thank you, Z and the Dan. Yeah, I thought that was really weird. 10 years, bad data. Okay, got to 2.3. All right, fine. It did look like bad data because the others didn't do that. Now, look, you see that green line right in there? Let me make this nice and big. You see the green line? You see that switch from red to a little bit of yellow as a transition takes place? Then it goes green, even though that bar went below it. And it stayed green all the way to there. And right here, it goes, changes color, but then it becomes red, negative. Look at the resistance level between 112 and 112.37. This is the IWM 10 minutes. And the 112.61 level. And what is the high today? 112.47, right in the middle. And that's what it was showing right there, resistance. But wait a minute. If you go back far enough, you'll see that there was, in fact, 112.39, 112.74. There's a ton of resistance for the SPY in this area. But there's also some support in the 111.76. We're at 111.86 right now, and 111.72. So we've got to watch this real closely. But wait a minute. You see the red line? It's turned negative. So you've got bands, like Bollinger Bands, but these are not Bollinger Bands. You've got, let me just double check. Yeah, they're standard error bands. And what you've got is the color that says the chunk, the bulk of the move is either up, and in this case now it's going down, red. So they've got a bunch of things that can help you. So I wanted to show that and to just demonstrate that using different techniques, one of the beauties of the Chapman wave methodology is if you add the wave counts, it just gives you another security measure. And that to me is really important. I actually use it primarily, besides chart formations. But I do this all the time, and I use it when I'm trading the futures or whatever. So let's just do this. We're going to go. What I was saying before was that the GCZ, I'm a little bit behind on it, but I still wanted to use it, could in fact create a rectangle formation. Gee, I don't know if I did this. Was it the GLD? There it is. Based on the GLD, what I had said is, I'm calling this peak F in the 10-minute chart, and the F/A, and then G/B. And I'm anticipating, and I already drew this a while back, early this morning during my show. I'm anticipating that there's going to be a peak A, but I call it inside buy mode in the GLD. One of the reasons why we wanted to buy the gold stock this morning is because I'm anticipating that there's going to be some kind of surprise. I don't know. I'm just saying from the chart pattern, I'm anticipating there's some kind of a negative surprise because gold will suddenly spike again tomorrow. We'll see. I'll talk a little bit more about this chart as soon as we get back. Basil Chapman sitting in for Darryl Martin. This is the Diagnostic Trading Hour.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Hi folks, we're back. Basil Chapman. This is, in fact, the Diagnostic Trading Hour. Usually I have the 11 o'clock to 12 o'clock time frame. That is the Tiger Technicians Hour. That's what I did this morning. I just added this because Daryl's away. We like to give you as much programming as possible here at TFNN. We've got a program going all the way through. We've got Dave White coming up. Should be a fabulous show. Dave making great calls as always. Now, most importantly, I'm looking at the Dow and the S&P. So this is going to be really interesting. This is typical of a bear phase where all rallies tend to fail and you close towards the low of the day. All news is bad news. I was expecting that we could go into tomorrow, and then tomorrow afternoon or Friday we start back down again. Hey, it doesn't matter. We're in our short positions. We had some really wonderful trades, and we hope to get more of them on for the short side. But in the meantime, back at the ranch, I was looking at the gold chart. This is on the 10-minute, and I had drawn this to say, yes, there's a Fibonacci expansion. It's gone 200%. I'm just going to get rid of that because it's not one of the techniques I spend a lot of time on. I don't dismiss it. It's just not one of the techniques that I only use it at certain points, just like I would use volume at certain points, etc. But I'd use on-balance volume a lot. And I'm anticipating that we will go a penny above 125.89 in the 10-minute chart to start B, and eventually we will get to a D, and it'll be above the high that was just made, the recent high of round number 126. And that's going to improve the gold chart, and there'll be a sudden spike, maybe tomorrow, because it's a 10-minute chart. Maybe it's tomorrow. I don't know. I'm just saying it has the look. Everything about it has the look that the surprise will come from nowhere. Now, market-wise, since this is the final section before we wrap up, and I hand you over to Dave White, what I want you to say is this. In the volatility index right here, it keeps holding very well. Look, it's at 16.33, and there was a failure pattern. It's down 54 cents. But in fact, 15.18 is really important support to 14.48. That's kind of, I would like to see it come back there and test a little bit, and then we start the next phase up. But if it starts to accelerate now, and look at the SPY making a peak F-top in the Chapman wave methodology right there, coming back down. If the SPY, in fact, slides under 191, by the end of the day, or getting close to it, it's going to say, hey, I just don't have any strength whatsoever. I can't sustain a rally. And that makes the VIX really important. Why? If there is a push into the 18s tomorrow instead of early next week, which is my anticipation, it's going to accelerate this move down. And when I show my subscribers to my opening calls, my daily newsletter, where we have all these different positions on, and I show you the parameters to look for in the GLD, the TLT, the DIA, the SPY, etc., as well as the positions that we actually own, as well as certain stocks that are really important, and the Dow in great detail as I've done here. And the Dow was saying that it should by tomorrow hit 16,341 in what I call a left side, right side price time match. It's missed it by some 20 or 30 points. The stochastic is very weak. It's just flattening out at 10%. There's really no strength whatsoever. So this is going to be a very interesting phase coming up, because a close underneath 16,300 would immediately tackle this level. I have to change the color now so I can see it again. You only need it when you need it. And when you need it, it's coming into this phase right now. That is the grayish, there it goes, that tanny, yellow tanny color of the 200-period moving average, which is right now at 16,300. Ooh, that's going to be interesting right there. 16,300. Why? Because I anticipate that this whole level between 16,350 to 16,250 is going to be a containment area for a bigger bounce. We'll see. Anyway, folks, we remain negative on the markets. Stay tuned. You've got Dave White coming up, and my services are open. Call. Check it out. 2 weeks free. I'll be back tomorrow morning.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.